this week. Let's find out which of them really we should be afraid of or not. And we have Adidotun joining us now to tell us observations so far and perhaps how risky these things are. Hi, Adidotun. Good afternoon. Welcome to the program.
Good afternoon, Ini. It's good to be here again.
Great. So I know you had an exciting time last week, seeing this very huge explosion in positive movements in the market. I'm sure that excites you also.
Of course, it's time to be excited. It's very good to be excited, seeing a lot of capital coming to the equity space. Interesting times indeed.
And we saw that the major stocks, the figures, the oil and gas. Can we expect that to continue this week?
We would expect profit taking to happen at some point. What we're seeing currently is, of course, we're not seeing so much surge on the oil and gas yet. And of course, the performance of the oil and gas is directly related to what's happening between US, Iran, Israel war, and which has driven oil prices northward. But today we've been seeing more interest, in banking names. We've seen a little bit of interest also in industrial goods and a few others. So the market is still very, very much positive.
Yeah, so a lot of people think that that's investors positioning for earnings.
Yes, we are expecting earnings. Results should be announced for Q1 anytime this week till next week. So we expect that blue chip companies, a lot of companies, will be able to sustain performance, which to sustain these price levels.
So what do you say to these risks, to profit taking? You've already mentioned that inflation concerns, FX volatility, global oil. What do you say to the possibility of these, stealing some of those gains that we had last week?
The thing there is that there is still a little bit of headroom, even in the equity space, because right now, looking at the metrics, the macro metrics, and looking at the numbers companies have posted in 2025 and what they are likely to post in 2026, we believe there is still going to be a lot of headroom. And also, the biggest driver also might also be associated with, the big one coming, much later in the year in terms of listing of the mega refinery and possibly NNPC.
Is there any incentive for an investor to get on the market at this time, looking at the level we've gotten to?
Of course, there are always opportunities depending on what side of the coin you're looking at. Looking at a few names, there are a lot of headrooms. If you pay attention to the numbers, you see that the numbers don't lie. And by the time we see Q1, it's going to be very, very decent and they should follow suit as well.
Can we expect the bubble to burst after the earnings?
Of course, we will expect that there will be correction in some names. Bubble. I'm not going to put it more like bubble because whether we like it or not, this is not more like 2009. I keep telling people, right? The balance sheets are bigger, companies are bigger, the framework is better. They can hold their own this time around relative to what happened some 16 years ago.
And talking about framework, this new trading time from 9 a.m. to 4 p.m. starting from next week, how do you expect that to affect activities at the market?
It's still not so clear how it will because what I would have researched from a personal perspective is at some point, there will be a law like, people, get a little bit lazy, it's imagine the trading time is almost doubled from like a 4 hour 30 minutes period, to 7 hours, that's a long time, right? Will the market be able to sustain tempo across those hours? I don't know, but of course, one thing you'd expect is that the behavior of every market participant is going to change given the extension.
And I believe for equity traders like yourself and others, it's more work, more working hours.
Unfortunately, this is my career, and that's what I find myself.
But do you see this
Yeah.
giving a window to, because the NGX believes this will give opportunity to, markets like, or investors like in the United States who would wake up and meet the market still open. Do you think that will attract more foreign investors?
Yeah, of course. I think is that the because foreign investors are here, whether I would like it or not, right? It's not as if they disappear. The attitude and the behavior is going to change. So you would imagine currently, U.S. clients who would leave mandates overnight or who would want to get in early to be able to, give mandates. Perhaps they might want to attempt a different approach. But either which way, on the institutional side of things, it all starts from a research being done, opportunity being spotted, and they take advantage of it. You understand? So maybe not. Timing may matter, but the thing there is that Nigeria is looking very, very exciting right now, and of course, it's a destination to be.
Yeah, it's a destination to be, and you are here. So thank you so much, Abiodun Adedotu, equity trader at First Securities Brokers.
You're welcome.